world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by Viktor Nebehaj, co-founder of Freetrade, a free stock trading platform in the UK. Founded in 2016 and launched to the public in 2018, Freetrade has grown to over 500,000 users in just over 2 years in the UK alone. For the full backstory, check out our episode with Founder Adam Dodds from February 2019, available on our website. In this conversation, Viktor takes us behind the scenes at Freetrade over the past few weeks, during the Reddit-fueled run-ups in Gamestop, AMC, and others, as the company struggled with partner-imposed trading halts and FX throttles. We also discuss payment for order flow, margin lending, rapid user growth, and Viktor's views on the good, bad, and ugly of free stock trading. If it seems like I care deeply about this subject, it's because I do. Investing is one of the most important things people can do to support their long-term financial well-being. But the industry is characterized by unnecessary complexity, conflicts of interest, and information asymmetry that can make it hard for people to get the best outcomes. Companies like Freetrade, Robinhood, and others have a tremendous opportunity to break up entrenched industry dynamics and bring access, education, and tools to the masses, now that they're mainstream in their respective home countries. For all of our past episodes and to sign up to our newsletter, please visit bankingthefuture.com. Thank you very much for joining us today. Please welcome Viktor Nebehaj. Viktor Nebehaj, welcome to Rebank.
Thanks for having me. It's great to be on the show.
Yeah, it's great to connect with you. This is awesome. You helped make the connection right before we hit play. I met Adam, your co-founder, who is on the podcast probably a couple of years ago now, on a bus in Barcelona as part of this UK trade mission, meeting Spanish banks. And I think you were saying that you were near us talking to some other people, and we didn't make the connection then, but here we are probably 5 years later, finally connecting. So it's great, Viktor, to finally meet you.
Indeed, likewise. Yeah, it was quite a trip, and it's great to officially meet you, Will.
Well, it's been quite the trip for you over the past number of years, and I guess, most acutely over the past 2-3 weeks now. And we can dive into that, but I do want to make sure we set it up with the appropriate context. So you and Adam co-founded Freetrade, which is a free stock trading platform in the UK, which I'll let you describe, and has some key differences from other free stock trading platforms that people might be familiar with. Some regulatory driven based on being in Europe as opposed to the US or elsewhere, and then some, I'm sure, more strategic or philosophical. But look, to kick off, tell us a little bit about yourself and your background.
All right, let's go back in time a little bit. So I grew up in Eastern Europe, in Hungary specifically. So when I was growing up, investing wasn't a thing that would not be a thing that existed under communism. I grew up in the 90s, which were probably the biggest societal upheaval Europe has seen in a while at the time. All these countries changing political systems, people ending up very poor as a result, and some other people and picking up government assets on the cheap and becoming what some people describe as oligarchs. But there was nothing in between really, and you had to be really entrepreneurial to kind of like get by. So I guess I'm a little bit a product of that. Thankfully, the Hungarian government, there is state-supported tertiary education. So I attended the university with social support, and I was able to graduate. And then one of the things I felt really passionate about, it was actually learning languages. So I became really fluent in German and in English as well. And I started to build my blog. The internet was kind of new at the time. The other pivotal thing that happened at the time, we joined the EU in 2004. And I was like, this is fantastic. I could go and work in Sweden, the United Kingdom, or Ireland without a permission to do so. I liked Ireland the most. And there was this little just IPO company, little bit of a startup / scale up at the time, a tech company called Google that was setting up in Dublin. And all my peers from the university, they wanted to work at banks. I never really understood that. And I was like, I want to work with the internet. So I applied at Google, and after some 10 interviews, they got back to me. They said that my profile is a little bit more technical than the average, whether I'd join a very secretive team, which turned out to be search quality operations. So that team would review the algorithms that guide Google search rankings. So I built a career there. I spent time in California, Mountain View, India as well. It was a great time. And after 7 years, I felt my learning kind of plateaued. I was a small cog in a very big machine. And I went and lived in Asia. I was leading a digital marketing agency in Hong Kong. Then I did an MBA. We moved back to Europe with my now fiance. And I ended up in London because she joined Google again. She left Google for me, and she joined Google in London. She's sitting quite pretty as head of Android strategy here. Well done to her. I was a little bit jobless here, and one of the first things that I discovered was Crowdcube. I saw a tube advertisement here in London and for Crowdcube, and I was like, this is fantastic. You can be an angel investor. You don't need to have hundreds of thousands of pounds. You don't need to have your own solicitor. You don't need to have your deal flow. You can pretty much just go on the platform and do it. So I went ahead and I invested in the very first crowdfunding round of Monzo that summer, and then Revolut as well. And my third investment was the best investment I ever made, which was Freetrade. And as soon as Freetrade popped up on my Crowdcube homepage, I was like, this is fantastic. This has to exist. It was pretty much Adam and his pitch deck. And I thought to myself, this is amazing. How much money do I have? So I looked across my bank accounts, across all the countries I lived in, Ireland, Hong Kong. I pulled all the money I had, thousands and thousands of pounds available. I invested it all in Freetrade. So I was left with 15 pounds. My girlfriend had to spot me until the end of the month. And it turns out I was the first investor who invested a meaningful amount, over £1,000, and wasn't a friend or family member. So Adam reached out to me, or I reached out to him. I just wanted to shake his hand, really, the guy who was starting to build this thing. And one thing led to another, and I joined him as his co-founder. And I'm heading up marketing here at Freetrade.
What an amazing backstory. So if memory serves me, right, like when Adam was first describing the concept to me, it was not brand new, because Robinhood already existed, and this was, I'm trying to place it now, but it was maybe 2016 when we connected. And so Robinhood already existed, and there was something. I mean, I remember my reaction at the time was like, okay, I get it. I still don't understand how the economics are supposed to work of a totally free, retail brokerage offering. I don't think I fully understood payment for order flow back then, margin lending, and various other ways that some free trading platforms make money. But the two things that Adam outlined for me were, one, that there was a kind of philosophical aversion to some of the more arguably nefarious, or at least potentially conflicted ways of making money, and that anyway in Europe you couldn't sell order flow, so that revenue line was kind of off the table. And then secondly, that the opportunity, if it was going to work, how do you offer free brokerage and make it make it work is that you basically like have to build amazing technology and get the right authorizations all the way down. Like it's not just build, skin some sort of existing B2B platform and launch a business. Like you basically have to nail efficiency all the way down. And I remember last time I was talking to Adam, he laid out in the podcast episode that we did a couple years ago now, he laid out everything that you guys had built to date, and even I think some of the direct connectivity into clearing networks. And firstly, it was amazing that it had been built. Even more amazing because I think the only funding that had been raised at that point was crowdfunding. And I think you guys have raised more money since then. But catch us up a little bit. Like from the these early conversations I was having with Adam, the time you invested on CrowdCube to today, and I guess, I don't know, more specifically the last couple of years, like how has Freetrade evolved and what's the business model?
Yeah, absolutely. To give you a little bit of a backdrop view, so when we started, we were a little bit discounted. I think it was all about neobanks, and definitely the media has a tendency to celebrate VC funding quite a bit more than crowdfunding. Although in my mind, crowdfunding trumps VC funding. It's just a lot more interesting when there are thousands and thousands of people behind you. And yeah, I feel we were a little bit discounted. So definitely that American, I guess, peer company that they often compare us to, that existed. And we never felt, I guess, kinship with that company or any of the other kind of upstarts, because payment for order flow in our minds, it's not something that we ever wanted to do. We never want to sell your data, period. We are a European company, very local, with an aversion to playing with your data, selling your data. The other very important point is, like, early on we made a decision, almost kind of like on day one, that we would never do margin lending. We think it's a toxic product. So if you think of the CFD industry in the UK and how many people end up financially worse, having been consumers of those products, CFD consumers, about 80% of them lose money, and on average they lose about £2,000 per year. This is FCA data. So our mission is to get everyone investing, and part of that is to get people better financial outcomes. We feel very strongly about that. We don't want to structure the company in a way that goes against our clients' interests. Quite a bit happened. So early on, we also decided that we want to invest in our platform, a proprietary brokerage platform that does the heavy lifting of what a brokerage does, execution, settlement, all that sort of stuff. And that was a little bit of a contrarian decision, because a lot of the fintechs that we see around us, they tend to be a thin veneer on top of other companies that power them. And make no mistake, you have to be part of the financial system. You have to plug into the plumbing of financial services. But at the same time, we never wanted to be like a user interface on top of another company. But that was a trade-off, right? So in order to do that, we allocated almost all our engineers at the time to build the platform, and they did amazing work. And as a result, we did not develop a lot of new features for 1.5 years, which was tough going, because our customers definitely wanted new features coming out often, but we had to tell them no. And this year, actually last year, 2020, really showed why building the platform was important. We've just seen incredible surge of customer numbers, of trade numbers, and our platform held up really well. Actually, we saw a lot of established companies sort of kneeling down under the pressure, and we did not. So that's I guess a justification of the strategy that we pursued, which is more, I guess, long term and more platform driven, as opposed to trying to partner with someone. So yeah, the other amazing outcome, that we've seen in the last couple of years, and that's probably the final point in the answer, is that I mentioned we were somewhat discounted at the beginning. Investing wasn't really like a big thing. I think it entirely turned around. Early on, we had a vision that what's happening now in Europe, and all the neobanks, all that focus on banking. In the end, investing is going to be where it's worth focusing, because with this negative rate environment where we are getting at this point in the UK as well, there is going to be no other place for your money. You have to invest, and it's healthy to invest. It's healthy to have that long-term habit. But just, I guess, for most consumers and the media, they did not really get there on time. So we were quite early building that out. And we think of ourselves as being the right company in the right place in Europe, right? It's an up-and-coming market when it comes to investing. And we think we are the right company building the right sort of components to service our customers. So that's been the journey. And at this point, we have 550,000 registered users. We have hundreds of millions of pounds under administration, and all our numbers are exploding and going up and to the right. So we are really happy and thankful to our customers and our team.
Yeah, well, I believe it in the current environment. So, look, I think the piece we really need to dig in on here and kind of focus the conversation around is your experience over the past, call it 3 weeks. So we won't run through the whole context with Reddit and GameStop and various other stocks and hedge funds with short positions and some moves basically by the quote unquote retail investor masses to exploit some market dynamics and punish hedge funds and potentially make some gains. In the end, that attempt effectively fizzled out because of, you could call them guardrails, you could call them artificial constraints, you could call it collusion, depending on how conspiratorial you are. That basically meant that Wall Street won again and retail investors lost. I think there are going to be some government inquiries now, which will be enlightening, I think, and it may even focus on payment for order flow, among other things. But with that as context, tell me a little bit about your past 3 weeks. Like, how did you immediately start thinking about and in your own mind and as a business leader responding to what was happening with these specific stocks and retail investor behavior more broadly? And then what immediate impacts did it have on your business? What was that experience like? And then we can get into part 3 of the question later, which is what are the implications for the industry and Freetrade and the broader, fintech space going forward. But starting with your immediate experience, I don't know, call it the day you woke up and saw all this madness starting to unfold.
Absolutely. So leading to that day, we've actually seen amazing growth, like really aggressive growth, throughout 2020. And that growth continued. But just to give you a little bit of context, we've seen our revenue increasing 48 times from the beginning of 2020 to December 2020. Amazing growth. Could not be happier. And that growth just continued. And then suddenly, from about 3,000 signups per day, we just saw overnight 30,000 signups per day coming in. So that was a 10x increase. So that was definitely
literally overnight, or week to week.
Overnight, one day to the other.
Yeah. Wow,
it's been increasing. There've been meaningful increases over time, but there was like a skyscraper of signups coming in. So that's quite an interesting experience because it definitely tested our technical systems. It tested our customer service readiness, and we are still working through the backlog of some of the customer contacts, and we actually ended up hiring. We actually ended up doubling the size of the customer service team, which was great. Plenty of people in this country are on furlough. Great people, so we actually managed to hire quite a few people on short notice. But back to the story. So we experienced this growth, and one of the first media reports, we started seeing brokerages, let's say, limiting access to these stocks or managing how available these stocks are. I think there is maybe an underappreciation of the technical context, because it's fairly technical. And basically what we've seen was that what a lot of these brokerages, clearing brokers experienced, you have to keep a certain amount of money with the clearing house, and that the requirement for collateral multiplied to the tunes of hundreds of millions, billions of dollars. We were not impacted. Thankfully, our setup is quite resilient. But
did you face increased? Firstly, do you support those stocks on your platform? GameStop, AMC.
Absolutely. Yeah. These are very normal US stocks, fairly vanilla equities. So yeah, we absolutely support them. And early on, we made the decision that what's going to guide us is doing right by our customers, treating customers fairly, and whatever happens, unless we are absolutely made to shut down, we are going to keep running, and we are going to keep our systems running and make sure that these stocks and all the stocks are available.
Yeah. And so did you face increased collateral requirements?
Well, actually, due to our setup, our clearing broker in the US did, and for a couple of hours they had to limit access to the stocks, but that literally lasted like up to half a trading day on the following week. There was a bigger issue that we dealt with, which was I think the big increase was on Thursday, and on Friday we wake up and we get a call from our service provider that does our FX conversion, and basically the gist of the conversation was that they wanted to throttle our bandwidth, the number of conversions they would do for us, FX conversions.
Why?
By 90%. Well, we did not understand at the time, and they were not particularly helpful in terms of explaining.
What company is this?
I'd rather, not name names. We understand the setup a little bit better now. So what basically happened, we kind of broke the banking rails that provide the FX conversion. So there were so many conversions coming online and so many customers signing up. And they did not only invest in GameStop, by the way. GameStop is actually a single-digit percentage of the investments went into GameStop. There was all kinds of stocks that people invested in. And so there was that FX throttling happening, throttling by 90%. And we were like, wow, okay, that's unexpected. We did not get a chance to work with them. We did not get a heads up. So basically what we did, we shut off the US market for that day. In terms of the buy orders, we kept the sell orders running to make sure anyone, we treat customers fairly and anyone can get out of positions if they have to, if they want to. And basically what we did, the whole company went into lockdown mode, and we worked through the weekend. Our engineers worked on basically inventing a technical solution that batches our orders and sends our FX conversions in bulk. And the rest of our company was working on customer service. Literally, product designers, finance people would jump on the queues and get back to customers. And then we also worked a lot on communications, because the most important thing here is, I think other companies probably did not think this through quite as much, but you have to treat your customers as adults. And while there is a complicated technical issue going on in the background, you want to keep them informed properly. You want to be transparent, because if you are not, especially in the current environment where, how the world is these days, it's just easy to misinterpret the situation, spin up conspiracy theories. So basically we went ahead, we communicated a lot. We described what exactly was happening and when, and we kept our customers updated through various channels. That was really well received. We got a lot of compliments from customers, investors, all kinds of people, which was great. We worked through the weekend And then there was that Monday where these stocks were switched off for a couple of hours. But basically, we managed to go through the whole experience with those only 2 outages and a weekend of working. So basically, that's how the experience has been with us. And we had a lot of conversation that revolved around, okay, what is the right decision? So we do right by our customers. That's what always was the most important aspect of every decision that we made, and it really helped us guide through the situation.
Yeah. Okay. Look, so I want to be respectful of your decision not to name names. A quick Google turns up, I think, both who your FX provider is, well-known FX provider for fintechs, a fintech company itself, and then also the U.S. brokerage platform that you guys work with. So what are you going to do differently, if anything, to protect yourselves against the next time something like this happens?
Yeah, absolutely. That's a great question. So there's definitely an element of learning, and we have made some technical improvements as a result of that solution that we implemented, and a couple of other platform level improvements that we have implemented or are in the process of implementing. I think the most important thing to understand, and I personally believe this was a world changer. It's not a game changer. It's a world changer that happened. So many millions of people got switched on to investing. They are not going to go away. Definitely not all of them. The vast majority experience this, and something like this can happen again. So the most important thing is there is definitely improvements that could and should be made on the overall plumbing of the capital markets, of which we are part of. And from our perspective, we have to do everything that's within our control, that it's high performing, that it operates as well as it should. I think the biggest outcome of this is servicing customers is very, very important. It's always our approach. We have turnaround times. We want to get back to customers and service them really well. But then something happens, something inevitable. If suddenly tens of millions of people decide to buy a certain stock, then we would experience something similar. It's very important to communicate correctly and transparently and accurately and honestly with customers, and make sure that even if there are technical issues, we treat them really, really fairly.
Yeah. Hey, so quick one for you, and a bit of a challenge question. I'm interested in how you guys think about this. So you talked before about people with that basically gamble in CFDs in the UK, 80% of them losing money, and on average losing $2,000 a year. How do you ensure? I mean, you'll see lots of kind of user level trade data, whether anonymized or otherwise, and aggregate type trade and investing data of users on your platform. It's pretty easy to look back across 2020, and any of the kind of like high flying tech stocks, which I imagine are what people are most interested in on your platform. Whether it's like Tesla or Square or Apple or Google or Amazon or whatever. They've just skyrocketed, right? So I'm sure people are very happy, and everyone has paper gains. But how do you ensure that people don't end up, whether it's over the cycle or whatever it is, but basically using Freetrade as a platform to speculate irresponsibly in stocks and potentially, create outcomes for themselves that are similar to some of these like spread betting CFD type outcomes?
Yeah. So there are multiple levels of how we optimize the platform for the correct behavior, which is absolutely not speculating. It's long-term investing, monthly pound cost averaging. That's what we are providing for our customers. And the number one thing is the product. It's not optimized for day trading. So if you look at the feature set, you would get limit orders if you are a Plus member. That's great, but really it's not optimized. We actually don't or pricing refreshes and sort of like the feature set and home, all the sort of like extra stuff that, let's say, day traders or speculators may want to have. They are not there, and that's a conscious decision. And it's also a conscious decision not to provide that, not to provide margin, because that's how you can amplify your losses to a devastating amount. And yeah, it's just, we could make more revenue, but we reject. We don't want to make that revenue off margin at all. So there is a product level aspect of this. There is also a very big aspect of this, which is education. And there's a lot of good like lip service paid to education across the industry. And we don't think a lot of companies do it like exceptionally well. What we really focus on is a multi-aspect strategy where we involve our community. So there is peer-to-peer level education. At this point, we reach the community size that someone newbie drops a question about investing and they get all sorts of right kind of answers about diversification and all that stuff. But we also run an internal analyst/investment writer team that regularly covers companies. And the trick here is that we are not after covering the Amazons and the Teslas of the world. There is enough content out there. We are covering homegrown stocks, boring stuff such as supermarkets as well. There is a whole mix, and we cover a lot of topics around kind of like baseline educational stuff, such as the different asset classes, volatility, diversification, all that sort of stuff.
Yeah,
we actually grew our mailing list quite big at this point, so a fair amount of people receive that education in their inbox.
Is there anything in the product? So I mean, if I think about like retail investing best practices, not to be overly like conservative, but it basically boils down to like regular investing, time in market, and then not trying to time the market. Is there anything in the product that helps like encourage people to do those things and discourage them from not doing them?
Yeah, absolutely. So I don't know if you are able to use the app.
I tried. I'm a U.S. citizen, so I don't think I can use it.
I suspect that based on the accent. So I was being careful there. So there is an insights tab. So there are like 4 different main screens of Freetrade. There is one about insights, and that provides information about your money-weighted rate of return, time-weighted rate of return with explanations. And we do something that I honestly have not seen any other apps or providers do. We actually provide you with a benchmark, which is based on the FTSE All-World Index, and we show how your investments performed against that index. It's very important to understand these concepts, because the most important thing for you as a consumer of a brokerage app is like, are you actually doing any better than the market? Do you get the sort of financial outcome that you are after? So that's the part of the app that already exists, and we already provide a fair amount of customized, personalized information for you. And we are going to build it out to be even bigger and sort of give you a toolkit that helps you understand how your investing is going and teaches you concepts such as money-weighted rate of return, time-weighted rate of return, benchmarks, all that sort of good stuff.
It would be interesting if you could like almost build in some automation or functionality which would let users even like passively, like the roundup concept on your spending, like automatically round up and move it to savings or move it to investing. But if you could like kind of automatically help users take gains and basically move them into like a more diversified ETF portfolio type thing, to make sure that like speculative piece served the really powerful role as an on-ramp into investing for so many people, but then also like worked hard to give them tools to convert that, to translate that into long-term, positive long-term outcomes.
Yeah, absolutely. So I think what you are describing, couple of ideas. I definitely think there is potential in rounding up change. It's not our we are not in that kind of business, but overall we will definitely build out a feature set that's going after the mission, right? Getting better financial outcomes for our customers. I think some of the stuff you described is more along the lines of limit orders, profit taking type of features, which we already have as part of the Plus membership.
Yeah. Okay, so I want to now dig in a little bit more on like what your takeaways are from this recently lived experience, not from a Freetrade or like strategy or operation standpoint, but much more just like a state of the world, state of the industry. What is this chain of events telling us about the future? Because on one hand, we talked about potential, or in fact, maybe even confirmed, but at least highly likely, government or regulatory investigations into some of these issues. And I think that at least the stat I read was that Robinhood counted like 600,000 new customers in a week, like as all of this was blowing up. And you talked about the new sign-up spike that you guys experienced. In a sense, it's almost like, no publicity is bad publicity. And actually, even as mangled as this whole episode ended up being, it's actually huge promo for free brokerage platforms. So there's that on the one hand, and on the other hand, there's kind of like arguably some indications of deeper seated feelings or consumer preferences or behaviors, which we might expect to manifest in future consumer behavior or customer expectation, the way that the industry goes. I'd love, given your position, to hear you talk through some of that a little bit.
Excellent question. It's almost like an onion. There are so many layers to it, but let me start with kind of like the societal/economic backdrop. So ever since the great financial crisis of 2008, there has not been a massive improvement in the economic opportunities of average people. Definitely not in the Western world. Coincidentally, my native country is actually doing better and better. There is better and better economic improvement, but that's a lower baseline. In the Western world, there is so much, inequality is a big word, but there is a certain amount of frustration, definitely, that comes with potentially poorer economic opportunity. So there is that whole backdrop, and it started with the Occupy Wall Street movement. And since then, smartphones blew up as a category. Everyone has one or even multiple. Everyone has access to apps such as ours. Meanwhile, there is all that quantitative easing that's been going on, which is fundamentally governments kind of inventing money in computers, adding more money into the system, which results in more money chasing, well, not a fixed demand, but some not equally growing number of assets and opportunities. So that resulted in the stock market having had a bull market that, other than the COVID drop, it's been an amazing bull market, and there is a certain amount of irony of these changing economic opportunities of people, whereas there is this bull market going on, and it's this amazing amount of wealth creation that's happening. $1 trillion companies getting into existence, such as my old alma mater, Google, as well. So there is this disconnect, and one of the things people discovered or able to do is is investing. And that in my mind, the way I see it, that's only going to be more dominant, because that's one of the few places to kind of go. And at least midterm, obviously you have to consider the risks, but midterm, long term, at least based on historic experience, you would end up with more money. So more and more people will discover that. I don't think we will see any change in the interest rates. If anything, they are going to go down or into negative territory. So there is this huge awakening. The sort of big Bitcoin run as well a couple of years ago, that was sort of part of that. People,
and right now,
and exactly right now, that's actually, there is a resurgence, and that's not disconnected in my mind either. So yeah, there is all this wealth creation happening, and what I want is that the average person, the average Joe, so to say, has access to that wealth creation. That level of opportunity is not like always equally distributed, if that makes sense. There are some things that still bother me about the financial system that we have, and hopefully it's going to improve. One example would be just like how IPOs are managed. Some entities having access to the book, and first day the IPO price pops, and retail investors sometimes only get access once it's popped. So we hope we can improve various aspects of inequality in the financial system, and I hope other companies are working on that as well. And I wish the best of luck to everyone in that, because there is all this societal / economic backdrop, and it can lead to certain outcomes such as unrest, and there is no reason for that. There is so much wealth creation and economic opportunity is just not equally distributed. Yeah. And I think the whole GameStop saga sort of switched people on. And while it was a meme, it was kind of like a little bit of flash in the pan, but I think it opened people's eyes to the to what investing is. Mm.
Do you know Primary Bid, Anand?
Yeah, I know Anand and his company, a fantastic company.
That's fascinating. We connected with Anand a while ago. It's probably like a year and a half ago now. But basically providing retail access to IPOs, which is super cool. I mean, is that something you could do with Freetrade, like either directly or via partnership with them?
Yeah, absolutely. That's something we would consider. I think Anand is a fantastic entrepreneur. I think he's building a very valuable solution. So we'll once we catch a little bit of a breath after all this, and we review our priorities for the year, we'll definitely think about IPOs and solutions and partners.
Yeah. Okay, so I actually, immediate question for you, which kind of gets to the broader topic of business model, and then brings us back around to payment for order flow. Why do you think that Robinhood, after much publicity, fanfare, and even I think an FCA license, ended up, so all of this in preparation for a launch in the UK and Europe, ended up basically shutting that down, and now they've gone back to US only. I think they effectively exited the team in the UK, shut down their presence, didn't decide to go into Europe. Why do you think they made that decision?
Let me zoom out here a little bit, Will, and talk about American companies and expansion and internationalization and the challenges that come in fintech. So this company as well, and all companies, they have a certain business model, right? That may or may not be a fit to the regulatory environment we have here in Europe. Particularly payment for order flow is not. It's not allowed in the UK. We've reviewed the market to understand, and we understand in Germany it's allowed. It's an exception, but in the rest of Europe it's not allowed. I think it's very, very important to think local when you try to expand and try to adapt to the regulatory environment. So in that sense, we invested quite a bit. We actually set up a company in Sweden, and we are opening an office there. and that's going to be our European entity. And even during that experience, we started mapping out the Swedish market, which is probably a good example of how we think about this issue and expansion. So similar to the UK, where we have our ISA accounts, there are 2 or 3 account types in Sweden which people use for tax sheltered investing / pension. So it's very important to understand whether your business model works in the given country and how you are going to make money in the given country. And honestly, you have to pay some respect to the country you are trying to expand to, and sort of try to consider it from the perspective of, if you become local, you can add a lot more value and your probability to succeed increases. So that's kind of the way we think about it. And I think probably that sort of thinking was not there.
Got it. Okay, so then looping back around to business model, you talk about payment for order flow not being allowed in the UK and it not being a part of the free trade revenue model. So what are the revenue drivers of free trade?
We have a number of revenue streams. I'm going to break them down for you, Will. So the number one is FX. So when you are a UK-based consumer dealing in sterling, you buy a US equity that's getting exchanged to US dollars, and we charge a very modest 45 bips on that transaction. Again, tying it back to the local business model, right? So one of the things we have in Europe is a number of different currencies, and there are fantastic businesses that build whole businesses on top of that, TransferWise, but a lot of others come to mind, right? So we think that's a very sort of locally accepted revenue stream. We are very, very obvious and transparent about it. And the other big source of revenue is subscriptions. That's our kind of like future. That's what we look to as what we want to really develop. So we charge a modest £3 per month for the ISA account and $9.99 for the Plus membership. And then there are going to be other revenue streams that we are going to get online. Traditionally, interest on cash would have been one. With the sort of interest environment we have here in the UK, that's not a meaningful amount of revenue right now. But we are internally discussing further revenue sources as well to diversify further.
Okay, yeah, fascinating. Look, this has been comprehensive and enlightening. I think you've brought a bit more context to some of the thinking I was already doing, and I'm sure many of our listeners. Any, I don't know, final takeaways? You mentioned before that, at kind of the very highest level, you kind of felt that the series of events that we observed over the past few weeks in retail investing have been, kind of a reflection of continued economic inequality, which I totally agree with. Any, I don't know, like more tangible projections or expectations going forward for what this means for either your business or for fintech?
Yeah, excellent question. I think what it means is that we have this sort of externality. The tide is rising, and a number of years ago when we started building Freetrade, and as I mentioned to you, we were a little bit discounted. It was an amazing time to start this business. It's probably the best time to start a business when it's not obvious what the opportunity really is, but you have this sort of insight. We expect this externality to continue for the foreseeable future. We are not foreseeing any fundamental changes or shifts in terms of the economic backdrop and how things are going. We hope that we can be a company that makes the world better by giving this sort of barrier-free access to investing and an opportunity for people to invest their money and get better financial outcomes, whether that's saving for a deposit or education. or even a wedding or anything like that. And that's definitely the sort of direction that we foresee.
Yeah. Excellent. Well, look, Viktor, I really appreciate you taking the time in the middle of this whirlwind. And look, I love what you guys are doing. You've built an amazing company, and people really love it, and it really meets a need. And it, I think you guys are going about it in the right way. So, wish you all the best, and I'm cheering you on from across the ocean.
Thanks a lot, Will. I really appreciate your kind words. They really mean a lot to us. Thanks a lot. And thanks for having me on the show. I really enjoyed it.
All right. Well, Viktor, thank you very much for joining us today.
Thank you.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.